Hi, welcome to this video from McBoss Capital. My name is Michael Chu. In this video, we're going to focus on when to buy stocks and how to buy them. Quick disclaimer, all materials are shown for information purpose only. They're not buy or sell recommendations. We're going to focus on sharpening our skills here, what to buy and when to buy. And specifically today, we'll talk about buy points. There are potential entry buy points based on a technical chart. That's usually how we want to buy. You can look at an early buy point on the base, and usually that involves looking at breakout from a base pattern. There's different types of patterns, but the ones we're going to talk about today are cup or also tight patterns. Sometimes during an uptrend or a stock uptrend, you may have missed the initial base pattern breakout, and so it's already on an uptrend, and you want to buy when it rebound, when it pulls back and rebound from key moving averages, like the 10 or 21 or 50 days. In general, buy points should usually be above the short-term moving average, like the 10 days, preferably also over 21 and 50 days. Usually, unless you have a very severe correction, then the 21 and 50 days trend line would be going downward still. But in most cases, it should be above all these key moving averages. The most common pattern is that a stock will correct and it will form a similar pattern to a cup. It looks like a cup, and sometimes it will form a handle. So and then what you do is you draw a trend line above the highs of the base, wherever the high values are. So that includes the beginning correction high to when it rebound, and then it might form a slight edge here, and same thing, if it was never form any handle, then you would buy on the previous high breakout. The reason to buy on the rebound rather than on the correction is because you have less risk, right? Because you're not sure how far it will go. It could go, not only 20, 30, 40%, but you don't know if it will ever come back to this high, right? So there's always stocks that are never going to come back to the previous high just because maybe the company is not doing well anymore. So things like that. Of course, if you have conviction, that's a different story. But again, it's just a matter of risk versus reward. So some stocks, when they correct, they don't correct much. So they could be within a 5 to 15% range correction, which is really tight pattern. And sometimes it just goes sideways, and it will just kind of go sideways within a tight range pattern. Now, when again, same thing, you would draw a trend line across the highs of this tight pattern, and when it breaks out, that's usually a good sign to buy. Again, there's different types of patterns here. Now, again, this one is related to when a stock has breakout from a base pattern or tight pattern, and it usually does pull back. Because every stock doesn't go up straight, right? They usually will pull back. So if you miss the original buy point, you may be able to wait for a pullback. And in this case, we use the 10 days moving average, and it fell below it, and then that could be a selling signal as well. Now, but sometimes stocks do rebound usually, and in this case, let's say it does, and when it crosses back above the 10 days moving average, that can be a rebound, and you could buy it at that point because basically it's telling you that the weakness may be done here. Of course, it doesn't work on every case. This is a probability. So we're going to look at BNTX. So let's just jump to it because today I'm going to try to give you a slight um, uh, synopsis about each stock so that you can understand better where the buy points are or whether you should hold and wait. Um, so for example, biotech today or this week it did rebound, right? And then we have a potential buy point, because of the rebound. Um, However, it's forming what we call a pendant pattern, and usually it's best to wait, just because there's higher risk from this pattern. So we'll talk about that. And Moderna is still below the 10 days moving average. So again, that's one of the note I made is that I don't usually buy if it's below 10 days moving average. So let's take a quick look at the chart. So before we touch on the specific stock, I do want to highlight this week stock market did pull back strong on 3 days, the first 3 days of the week, so Monday to Wednesday, and you can see that on the S&P right here. It dropped on Monday to its 10 days, and then on Tuesday it went below the 21 days, and then by the Wednesday, it actually dropped to the 50-day, right? So that's a very strong 3-day drop where it really tests all three key moving averages here. Um, but it did rebound on Thursday. Now Thursday it looks okay, but it doesn't look promising because it's still below 10 and 21 day. And you see the 10 and 21 days is starting to converge, right? So that's a good sign. Just because, as you can see, S&P has been moving uptrend, but now it has pulled back. Uh, and now it rebounding and it went above the 10 days and 21 days again. So this is really good sign as a setup for coming week. If it truly rebound, it will continue this trend and it might start a new rally again, right? Um, so that's something to watch for because most stocks do follow the market trend. So if we go look at, and we'll see a very similar pattern to this on many stocks this week. So we're going to jump straight to biotech. And we see that here, surprisingly, it has a slight different pattern. You can see Monday, biotech jump on the news that I think their vaccine will be, as partner with Pfizer, will be used for possibly approval by, CDC or whoever FDA in regards to adolescents, 12 years and kids, right? So so Monday it showed very strong action, despite the market moving down. And Tuesday, Wednesday, obviously, it dropped, again on the market. But, notice how it's trying to hold on to the green line here, which is the 10 days moving average. And that's very strong. And then on Thursday, it did fell below it, and unfortunately, well, it actually not a bad thing because look at where it closed. It's actually closed at 47% range, which is not at the bottom, right? And that's a good sign because it shows that there is someone buying at this level. And on Friday, rebound again above 10 days. So this is a rebound of the key moving average here, and that's a good sign possibly to buy. Um, the only caveat to this pattern right now, or this rebound, is that we are getting into a pendant shape type of formation here. So what does that mean? So you can draw the from the high here, along the highs, and you can just draw this pattern down. And I'm just going to draw it somewhere like this, and then you know on the bottom here, I'm not going to go from bottom because it's kind of a little bit skewed because it's a big range here. But let's just say I follow the 21-day trend line here, and you can see that it's trying to, the price action is trying to, trade in between these two lines, right? This is what they call a pendant, like it looks like a pendant shape formation. And usually, when a stock forms this kind of pattern, it means that it will trade as tight as possible within this range, and eventually it has to make a decision. Either it will go up here, or it's going to go down here, right? So that's why I'm hesitant to buy it here just because of that. Okay. Now, of course, it could go either way. So something to watch out for, but it is showing really good uh, a pattern, in general on the chart because you can see it is trying to hold on this 10 days for many sessions now. Now things could change if some news come out and that could change the company outlook, stuff like that. So you never know, right? So but from a chart perspective, it is looking promising. Let's see what's going to happen, right? So it looks like it might make a decision this week, because it's very close to the pendant endpoint here. We're going to jump to Moderna. Um, Moderna, has formed a double base pattern. You can see here, it corrects and then come back. It looks like a cup pattern, right? And this right now is forming what we call a handle right here. Now, the problem with this handle, again, it's really hard to draw a trend line because this cup is pretty. It looks like a perfect cup here, but then it forms a handle, but which is quite low. So really, the only way you could draw any trend line again is to look at the 10 days moving average. So if I draw a trend line there, it is sliding down, right? It's trending down actually, the 10 days moving average. Now again, with that being said, it is trapped between this 10-day and the 50-day, right? So again, it's starting to form what we call another similar pendant formation. It is trading within here, this range. So again, it's this one is more bullish than the previous pendant because the bottom side is not like it's flat. So there's a more chance as long as it holds this 50-day, it's more bullish pattern, right? Because it has a higher chance to break out here. So so something to watch out for. So that's biotech and Moderna. We're gonna move to software security group here. So computer software security is tech industry. They're kind of following the Nasdaq, and Nasdaq has corrected more significantly in recent weeks. So it did, kind of pull back, or even you can consider correction in some cases, just because some has corrected 10% or more. Um, and when we look at the top, some of the stocks here like CrowdStrike right now is below key moving averages. Um, Fortinet, it is, it has, again, most of these stocks have seen distribution, meaning like, selling stocks on higher volume recently. It did rebound off the short-term moving average. So, that could be a good sign. Set, FireEye is setting up for early buy point. Um, it's not quite there yet, but it is setting up. And Minecast is showing strong accumulation and also an early buy point. So let's take a quick look at that. Again, before I jump into those stocks, I'm just going to quickly highlight Nasdaq again. So Nasdaq, it fell, to reach a new high a few weeks ago, and since then it has been on a downtrend. And the worst thing is that is when it stopped. You can see that the 10-day moving average is trending down, and it has a hard time moving above it. So unless it moves above it, it is still on a downtrend. So this computer security group could be impacted by how the Nasdaq react. Now, of course, it has a potential to move back up. So something to watch out for. So let's jump to the security group here, CrowdStrike. So let's look at the group chart quickly. It follows similar pattern. It failed to make a new high, and then it's been trending downward. It's near the 50-day, so same thing, right? It's just kind of stuck in this range right now. Um, so if we look at in general, if you look at the chart action, um, it's able to hold off the lows here, which is not a bad sign, right? But it is stuck below all the key moving averages, so it's still on a downtrend. So unless that trend changes, just like that Nasdaq, it could have more, it could fall more. So something to watch out for. But if we look at each stock, you can see the pattern very similar. This is CrowdStrike. Let me just turn on my markups quickly here. I draw the trend line down here, and again, same pattern. It's holding off the lows here, and you can see the selling volume is starting to dry up, and it's not making new lows, right? So that may be a good sign, but again, that doesn't mean anything because it is below the key moving average. Fortinet, this stock has been strong until recently. Again, it pulls back. So most stocks will pull back, right? And it doesn't go straight up, because sometimes it just needs time to digest the those prices at those prices. So recently we saw two down days on heavy volume here. But now, we have seen 2 days of rebound. This one is slightly above 10 days, so that's a good sign. It's a potential rebound here that you can buy or add to your shares. But again, this whole group is under still, considered risky at this point because of where it stands as a group and it follows Nasdaq, right? So if we go to FEYE, uh, this one is building a long base, as you can see. But recently, the actions are pretty good. You see more blue days, which is up days, and the red day recently again. It didn't make a new low, and so that's another good sign. Um, and now it is above 10-day, 50-day, and 21-day, but it has done that previously, and again, they did that before and it didn't really make any headway. So it doesn't mean that just because it went back up above the moving averages that it will work. But just to it is setting up though. Like let's say you want to draw a trend line here, and you can let me draw a trend line here. You can draw a trend line here, like something like this, and you can see it's along the highs of all the highs here. If it does break above this trend line, it could be a signal for a breakout here. This is an early buy point, right? So something to watch. Um, Let me go to Mimecast here. Mimecast, you can see it's starting to curve up. It did fail here. It formed a handle, right? So, well, not fail. It just building a handle here, and you can see the trend line as well that I drew. So it did break above it, so this is a buy point right now, near the buy point, so that's a good sign. And look at the volume came in, right? Look at how many days of above average volume here in the last 6 days. Of course it's acting super strong right now. I would say this is a good entry point based on this action here. So we're going to jump back to another slide here. The retail leisure products. Again, last week was pretty much this whole week the market pullback, including all the stocks, not just the Nasdaq stocks, but also S&P stocks and the small caps, all of them. But let's see how they do, right? So we go back to this group here, and and you see that 3 days down and then 2 days up, right? So this stocks in the retail leisure products could have been really strong. So this gives you a chance to actually uh, buy on this rebound, right? So it is now back above the 10-day. It did test the went below it and then test the 21-day and then bounce off. So this gives you a chance to buy on this rebound. And I would say if the stock act well, it might continue its uptrend, right? So some of the stocks did suffer distribution, like on this red day, this down day here. It did sell on higher volume than the previous update. So, but it did come back, right? It did rebound, and now it's above uh, 10-day. So sometimes, there's no black and white rule because on hindsight you might sell on this day. Sometimes it's good to sell, maybe a little bit, depending how you want to strategize. You might sell. This is a first sell signal. It's or second sell signal because it also went below 10 days. So you might have sold some, but now it looks like it's bouncing back. Now again, depends on how the general market does. It seems to follow the general market, so like S&P. So watch for that. If it rebound, then most likely market rebound and the stocks will rebound as well. Um, let's look at take sporting goods. Same pattern here, almost identical. It's above 10 days. So again, you could add shares right now, just or buy new shares, um, because it has pullback, right? This is a strong IPO stock, and it broke out here on a a tight pattern, a flat base. It has moved up strong, and look how tight, like it doesn't look tight on this chart, but for a stock that is in the $20 range, that's considered tight, right? It is holding up nicely at this 10 days. It never even tests the 10-day much because it never really quite went below it. So consider what the market has done recently, pulling back. It is a very strong action. Even on the sell day this week, it was low volume. This is a very strong stock. I would pay attention to this guy. Um, Leslie, this one is probably the weakest chart, as I mentioned. It is building a cup of handle, so you could draw a trend line, somewhere along the 10-day or the highs, whichever you prefer. You can draw one here, right? So if it does move above and close above, it could be a rebound, or you can draw a more conservative along the highs here. So it could have to go somewhere above that line, or if you want you can just wait until it does break out from this uh, cup with handle buy point at the top here. So there's three potential buy points, but this is probably, like I said, the weakest chart of all those four stocks. um, the last group we're going to look at, we continue to look at the commercial service staffing. This group didn't act as well this week. Probably they'll also show um, more sideways movement, but that doesn't mean it's bad. It just means it's consolidating, right? Men and jobs are setting up, so those two could potentially break out soon, and KFRC and KELYA are rebounding after pullback, so that uh, potentially also setting up. Uh, let's see. Let's look at this chart quickly here. So let's go to men, and we're gonna look at the group first. So same pattern, 3 days down, 2 days up, follow the market. So again, when a group does follow the market, generally, when how the market reacts, the stocks will follow in this group. Uh, Now it is above 10 days, and it's a good sign. Um, and we go to the Manpower Group stock. You can see how it rise, very quickly here, and now the 10-day moving average is starting to, kind of go sideways, and that's not a bad sign. and it did test it this week. It went below it, and then the next day it bounced back. That's a very strong sign, and not only that, when it dropped on lower volume than the previous update. So that's always a good sign to see. So I would say, if you draw a trend line above this tight pattern, that could be a buy point when it break above that, or you could have bought, at an earlier buy point, at this 10-day moving average as it rebound above that. So those are potential buy points. If we go to jobs, this also, it did suffer a long-term downtrend. It did break above, all three key moving averages here. It gap up probably on the, I'm not sure if there was news or anything, but look at how it's trading. It really tight. Okay? When you see tight pattern, that usually means there's someone buying, right? Especially institutions. And so right now, it hasn't even tested 10-day at all. So this is a very strong action for technical perspective. So something to watch out for. Again, it never formed new lows this week, which is also a huge, big, sign of accumulation. So very strong stock. The other two we want to follow is K-Force. It did suffer a distribution day on Monday, so selling on higher volume than the previous update. But Tuesday, Wednesday, the volume dry up. You see how low the volume is right here, and then it starts to rebound, and now it's above 10 days again. So the uptrend can continue. So let's look at KELYA service. So this one has a huge test on the 21-day here, and it dropped as low as 50-day before rebounding. So this is a very this is another like something to watch out for on the chart, is a what we call a upside reversal. So notice how it dropped almost down to the 50-day to test it. But you know what? The buyers really want to buy at this level, and it closed at near the top of the range. And not only that, it closed above the previous day. So almost as if nothing has happened, but it did shake out a lot of weak investors, and now it's above 10 days. So the uptrend could continue from here. So let's see how the market act in this coming week. But like I said, a lot of stocks are rebounding, and they're setting up for potential rally again. So something to watch out for. Thank you everyone for watching this video. Please subscribe, give us a thumbs up, and send us an email if you have any questions. Thank you.